Hey everyone, and welcome back to another cryptocurrency video. In today's video we will be discussing the Bitcoin dominance and its relevance within the cryptocurrency asset class. If you like this type of content, make sure you hit that thumbs up, make sure you hit that subscribe button as it means oh so much to me. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get a nice discount off your next purchase. So without a further ado, let's begin, and let's begin why the Bitcoin dominance metric is so relevant within its own asset class. Well, a lot of investors like to believe that the Bitcoin dominance holds no weight, but I'd like to disagree, and I'd like to disagree heavily on that statement, because the Bitcoin dominance metric allows us to understand our best risk-adjusted returns within the cryptocurrency asset class. And what do I mean by this? Well, there's a couple of things that the Bitcoin dominance tells us, and it tells us whether or not we can make a wise decision with regards to either holding Bitcoin or holding altcoins, and it allows us to understand whether or not the asset class is in a risk-on or a risk-off environment. So allow me to explain. Easier said than done. But when looking at the Bitcoin dominance, especially in these last two cycles, you can't really count anything prior 2017 because altcoins didn't really exist prior 2017. It was just pretty much Bitcoin since its inception all the way until 2017. Easier said than done, as previously mentioned. You want to be investing into altcoins up here and then investing back into Bitcoin down here. Bear in mind that this metric does not include the price of USD, yeah? In terms of your cryptocurrency pairing against the US dollar, that holds small relevance with regards to the Bitcoin dominance, because the Bitcoin dominance just tells you whether or not we're in a risk-off, risk-on environment, or whether or not you should be holding altcoins or Bitcoin. For example, again, you want to be investing into altcoins when the Bitcoin dominance is high, and then you want to be investing into Bitcoin once the Bitcoin dominance metric is low. Yeah, this metric is essentially comparing Bitcoin to the rest of the asset class. It is not comparing it to the US dollar. Because, and the reason why I say that is the Bitcoin dominance has been in an uptrend ever since November of 2022, right? And so has Bitcoin USD. But the Bitcoin dominance rising suggests that we're in a risk-off environment because altcoins are bleeding back to Bitcoin. But it's weird saying that because Bitcoin USD and altcoins USD have been trending up. So how could we be in a risk-off environment? Well, we are, because altcoins are bleeding back to Bitcoin, and a leading indicator of the asset class being in a risk-off environment is if altcoins bleed back to Bitcoin and the dominance of Bitcoin rises. Yeah. A way in which we can tell whether or not that statement is true is by overlaying the Bitcoin dominance with interest rates. And it's funny looking at this because the Bitcoin dominance metric only gained some sort of irrelevance from 2017 onwards. And what do you know? That is when Bitcoin and cryptocurrency experienced its first rate hiking cycle. Funny that, right? And especially now, going through this cycle, we are again going through a rate hiking cycle. So the Bitcoin dominance does play a vital role with understanding whether or not we should be Bitcoin heavy or altcoins heavy. At the moment, you can see that Bitcoin is, well, the Bitcoin dominance is at 53.3%. It is currently down on the month. Yeah, the month began at around 55.08% and is now down at 53.29%. Many like to believe that the Bitcoin dominance is going to go down, and they have valid reason to do so, because what normally happens when Bitcoin USD makes its all-time high, that money from Bitcoin USD makes its way into altcoins. And I'd like to agree with that statement. However, whilst we are in a phase of QT, quantitative tightening, I believe that is different. Yeah. If we take a look at Bitcoin USD, for example, you can see that once Bitcoin USD hit a new all-time high and started to range right here, that is when altcoins blew off. If we just actually overlay this with the Bitcoin dominance, if I add it right now, I'm going to set a new price scale, you can see that when Bitcoin USD put in a new all-time high and started to range, you can see that the Bitcoin dominance fell off a cliff. Yeah, and same again 2 cycles before that. When Bitcoin USD put in a new all-time high right here, you can see that the Bitcoin dominance fell off a cliff. So, in prior history, whenever Bitcoin USD makes a new all-time high, the liquidity from Bitcoin USD falls into altcoins, therefore alt season occurs. But both of these phases were during phases of quantitative easing, where there was liquidity in the market, and I believe that altcoins thrive off of liquidity. It is essentially their drug. If there is no excess liquidity within the economy, altcoins tend to bleed against Bitcoin. So, when taking a look at the Bitcoin dominance and overlaying the Bitcoin dominance with interest rates, you can see that both times there was some sort of relevance with the Bitcoin dominance. It was due to 2 rate hiking cycles. Now, we don't have many data points for Bitcoin because its inception was in 2009, and the altcoin inception didn't really occur until 2017. But both times that the Fed's balance sheet started to decrease because they were constricting the economy because of high interest rates, what do you know? The Bitcoin dominance goes up. Same again this cycle, like last cycle. Once the Fed starts to reduce their balance sheet, once the money supply decreases, once the liquidity decreases, once interest rates are high, what happens? The Bitcoin dominance goes up. Why does that happen? Well, it is very well known, and this also happens in the stock market. If you are a well-educated investor, you would know that during times of quantitative tightening, investors like to move their assets from high risk into low risk because they fear of an uncertain outcome at the end of the rate hiking cycle. So liquidity from high risk assets falls into lower risk assets. Just like in the stock market, penny stocks, the liquidity of penny stocks goes into the top 10 of the S&P 500. Just like in cryptocurrency, Bitcoin represents the top 10 of the S&P 500 and the altcoins represent the penny stocks of the stock market. So, liquidity from the altcoins are making its way back to Bitcoin. What can we suggest what will happen in the future? Well, as long as the rates are higher for longer, we can ultimately suggest that regardless of where Bitcoin USD goes, the longer interest rates are higher, the more altcoins are going to bleed against Bitcoin. And I am of the opinion, because we need to discuss where the potential outlook could look like for the Bitcoin dominance in the near-term future, I am of the opinion that the Bitcoin dominance still has a way to go. I still believe it will break this range right here. It will break that 54-55%, and I do believe it will make its way towards that 58 to 60% mark. And why do I say that? What is the confirmation to understand that we are in a risk-off environment and that altcoins will continue to bleed against Bitcoin? Well, one, as we discussed, interest rates. the rate hiking cycle hasn't ended just yet. Yes, the rates have been paused, but QE isn't coming for another while. Rate cuts aren't coming for another while. Yeah, the Fed is still looking likely to pause come next meeting, which is the 1st of May. And only thereafter, the Fed is looking likely they will cut rates for the first time. Until that point, then altcoins will continue to bleed against Bitcoin. Just like last cycle, if we compare it to last cycle, it's very similar because last cycle was a rate hiking cycle. Only up until the Fed cut for the first time, that is when the Bitcoin dominance topped out. So that's one sign. Another sign is this metric right here, and it is better known as the Bitcoin dominance but flipped on the inverse, taking away Ethereum and taking away the market cap of USDT and Ethereum. So it is total free minus USDT. Total free represents the altcoin market minus Ethereum, minus USDT, the market cap of USDT, doing that equation, and then dividing it by Bitcoin, and then you get a chart that looks like this. Last cycle, you can see that once this chart broke down from this level right here, that signified a risk-off environment. I'm of the opinion the same will happen and this chart will drop down. It's very important to watch that if this chart closes below 0.4, that is when you know we are in a risk-off environment. But what can cause that? What can essentially cause this to happen? Well, if we again overlay this with Bitcoin USD, last time it occurred on a Bitcoin pump. Yeah. This time, no one knows where the price of Bitcoin USD is going. That is not what I'm suggesting. I'm suggesting that we are heading into a risk-off environment. It could be a Bitcoin pump, or it could be a Bitcoin dump. Just know that liquidity is flowing from altcoins into Bitcoin. To better understand this again, if we overlay this with interest rates, you'll be able to see that on the first rate cut, that signified a risk-off environment. The first rate cut isn't coming until projected to be until June. So we could evidently get to June right here, and that is when this chart will essentially break down. Another way is by looking at gold. Yeah. And why is gold so important? Gold, you might believe that gold has nothing to do with the cryptocurrency market, and you have a valid reason to believe so. Even though a lot of people compare Bitcoin and gold, and they say that Bitcoin is the digital asset of gold. But gold is an interesting metric to look at. The price of gold is interesting because whenever gold is pumping up, again that shows that we are in a risk-off environment. If gold is trending down or trending sideways, it means that we are in a risk-on environment. You can see that throughout the last decade, gold has essentially gone sideways. Why? Because the Fed's monetary policy was just so eased from 2008. It was just easy. It was easy. There was so much liquidity just getting printed and printed and printed from 2008, from the bailout of the banks after the global financial crisis. So much liquidity was in the system, which signifies that the economy is in risk and in a risk-on environment. Hence why gold went sideways for such a long time. What do we have now? What do we have now? We have gold breaking out to all-time highs. Gold has finally gotten its breakout above 2000 and it's now breaking out into new all-time highs. That's another reason to suggest that we are in a risk-off environment. Another metric to look at is the DXY. Again, I've covered this in a prior video, and this metric is useful because we get to understand the negative correlation relationship that the US dollar index has with Bitcoin. If this chart is trending up, it also suggests that we are in a risk-off environment and that Bitcoin is likely to underperform. If this chart is trending down, it likely suggests that Bitcoin USD is in a bull market and trending to the upside. If you don't believe me, if we just overlay Bitcoin USD and then make this a logarithmic scale, you can clearly see that when the US dollar index is down, Bitcoin goes on its bull market. When it goes sideways, Bitcoin sideways. When it goes down, Bitcoin in a bull market. When Bitcoin goes down, you can see this trends up. Yeah, so there's a clear negative correlation between the US dollar index and Bitcoin USD. This has currently been in an uptrend the last 3 months. Back tested as support, came back down, back tested, and could be forming new highs in the near-term future. Again, that's speculative, but the confluence is there, you know. You have interest rates, you have gold breaking out to new all-time highs, you got the DXY back testing its range lows of support. All the confluence is there to suggest that the Bitcoin dominance will be heading higher in the near short term. So with that being said, it is probably best to wait, or you could start to DCA if you are a Bitcoin holder and start to DCA into altcoins once the Bitcoin dominance reaches these levels right here, which is between 56 and 60%. Once the Bitcoin dominance reaches those ranges, that is when I will be adjusting my portfolio and switching my Bitcoin into altcoins. So that is it from me today, guys. I hope you all enjoyed the video. If you did, smash that thumbs up, smash that subscribe button, and as always, it's been your boy J1 General. Thank you and goodbye.